Welcome back everyone. In this video, we're going to take a look at two rapidly expanding tech companies that have taken a major beatdown throughout 2022. The entire NASDAQ is now down 33% on the year-to-date chart, and many of the biggest tech names in the market have fallen by over 30 or 40%. So in this video, we're going to take a look at two tech companies who are down over 50% during the past 12 months, but may be poised for some long-term capital appreciation once the market begins to rebound, and both companies are considered undervalued at their current share price. So in this video, we're going to take a look at two different companies, both tech-based, both down bad throughout 2022. We're going to go over their current operations, take a look at the financials, and of all the potential high-risk tech companies you can buy on the market right now, these may be considered two of the safer options as these companies have very little to no debt on the balance sheet as of the latest quarter, so the companies operate with very little leverage and continue to grow quarter after quarter, which is a great sign. So before we jump into that first stock, I am going to ask you to please hit that like button and subscribe. I'm the Gen Z Investor, and on this channel we talk about different stocks you can invest in, all major stock market news, and we track the progress of my personal stock portfolio, which is now at a value of $159,000. So please hit that like button, subscribe down below, and we're going to jump straight in to the first tech company that continues to grow quarter after quarter at a high double-digit rate, but has taken an absolute beating in 2022, and that is ticker AMD for Advanced Micro Devices. They currently trade for $64 per share, and we can see they are down 57% on the year-to-date chart. Currently trading very close to the 52-week low, and the company now trades with a very reasonable forward PE ratio of only 18 and a market cap at just above $100 billion. And if we jump over to the Morningstar report for AMD, their estimated fair value per share sits all the way up at $111, meaning they believe the company is now trading at an over 40% discount from their estimated fair value. So overall, the analysts at Morningstar are very bullish on the company and do have high expectations for the estimated fair value of the business at this current point in time. And if you're unfamiliar with AMD's operations, they're a semiconductor company. They operate in three main segments, providing products for high-performance computing, high-performance graphics, and adaptive computing. And they believe they have an absolutely massive total addressable market worth over $135 billion across data centers, PCs, embedded, and gaming. So the company overall believes they can continue to grow. They have a lot of opportunity in a fast-growing market, and this company is already a market leader with some of the best products you can buy right now. And if we take a look at their latest quarter, AMD generated $5.6 billion of total revenue, which was growth of 29% year over year, and three of their four business categories saw incredible growth. Data center revenue grew by 40% year over year. Their client revenue was the one segment of their business that saw a major decline, down 40% year over year, but their gaming revenue grew 14%, and their embedded revenue grew by over 1,500%. The company also improved their non-GAAP gross margin by 2 basis points, and it currently sits at 50% overall, which is very strong. They generated $965 million of cash from operations, and the company does a great job of actually converting their free cash flow, and they generated $842 million in the last quarter as well. And this company has been performing this well for the past 5+ years. If we take at a longer term perspective on their income statement, we can see total revenue back in 2017 was only $5.2 billion. You can see the rapid expansion over the past 5 years up to over $22.8 billion in the trailing 12 months. So AMD has performed extremely well during the past few years, continues to grow quarter after quarter, and all their financial metrics are following that same direction as total revenue, and they've done a great job of turning that revenue into profits over the past 5 years as well. And taking a look over the past quarter, this company has showed a very strong and improving balance sheet. Why I said at the beginning of this video is that these tech companies, although they've seen a major decline, of all the high risky names you can buy on the market that have a ton of debt that are highly leveraged, AMD and the second stock we're going to go over are not the same. This company has a phenomenal balance sheet. Taking a look as of the latest quarter, they have $5.6 billion of cash, $4.3 billion of receivables, and $3.3 billion of total inventory as of Q3 2022. And the total debt on the balance sheet currently right now is only $2.5 billion, meaning the company is a net position of over $3 billion. They have cash and cash equivalents of $5.6 billion with total debt of $2.5, meaning they can pay off all their debt right now and still have $3 billion in the bank. So the immense strength of AMD's balance sheet is not a typical trait that you see from a company that's fallen by over 60% in share price during the past 12 months. And as the company's share price continues to hit record lows, the management has been buying back more and more of the company's common stock off the market for a major discount, We can see in Q3, they bought back $617 million of their common stock, so they returned capital to their shareholders, which is always a great sign. And if we take a look at their guidance for the full fiscal year of 2022, they're projecting total revenue to be around $23.5 billion plus or minus $300 million, which would represent year-over-year growth of 43%. So the market has sold off a company that has been growing by 43% year over year in top line sales with a massive gross margin of 52% overall, and the company is still profitable. So although this company has a very strong balance sheet, they're still growing at a high double-digit rate year over year. The market just isn't reacting positively to the AMD outlook right now, so definitely a company worth taking a look at. And now moving into the final report for AMD, a survey of 42 different analysts was taken. The average consensus was a buy. There was 11 strong buys, 18 buys, and 13 holds, and no analysts were selling out of AMD at this current level. So overall, the consensus is a buy. The company is expected to be trading below their estimated fair value. They have a very strong balance sheet. Revenue and income continues to grow. They're buying back their stock. Overall, a lot of positive trades from AMD at this current point in time, and the company may be sitting at a very attractive price point. So although it's fallen by over 60% during this past year, it is definitely a company worth doing some research into. So that was everything we're going to go over regarding AMD, and now we're going to jump straight into the second stock in this video, and that is ticker PLTR for Palantir Technologies. They currently trade for $7.21 per share and are down by over 61% on the 1-year chart. Again, sitting very close to the 52-week low, and the company now has a market cap of $16.3 billion. So just a few years ago, this was one of the high-flying hype names on the market. It was growing by 100-200% in just a matter of months, and everyone was piling capital into Palantir Technologies. But of course, that entire theme is absolutely reversed, and the company is now seeing a major pullback. So essentially, in very simple terms, Palantir is a big data company. They help governments and corporate clients convert large amounts of information into usable data points that can actually be used in the decision-making process. So of course, what they do is much more in detailed and much more in depth. That was a simplified overview, just to get an idea of how the company operates. If we take a look at the Morningstar report for Palantir, their estimated fair value per share for the company is now sitting at $13. So that means the company is sitting at right around a 39% discount at this current share price. So again, similar to AMD, a company is trading very far below the estimated fair value according to analysts. And if we jump over into their latest quarterly report, they're still growing at a very fast rate quarter over quarter. Total revenue in the US grew 31% in Q3 to $297 million. And Palantir serves two types of clients. They serve the government and also corporate clients, and that's how they break down their sales. So for the government side of their business in the past quarter, that grew 26% year over year, and in the trailing 12 months, they've generated over $1 billion of revenue from their government clients alone, which was a big milestone for their business. And if we take a look at the corporate side, that grew 17% year over year as well, which is a great sign. And US commercial customers, so just customers based in the United States, that revenue grew 53% year over year as well. And the company added 33 new customers overall in the quarter, representing quarter over quarter growth of 11% and year over year growth of 66%. So they continue to do a great job of adding new customers into their business model quarter after quarter, which is a fantastic sign. And taking a look, their top 20 customers, the average revenue collected has grown by 15%. So what that means is the top 20 customers are not leaving. They're not switching away from Palantir. They're actually buying more and more of their services, which is a fantastic thing to see. And if we take a look at their income statement over the longer term, I understand why the company was so hyped back in the day. Their total revenue has expanded rapidly, tripling in the past 3 years, and in the trailing 12 months, they've generated $1.8 billion, and their operating income is in the negative. The company's not yet profitable, but overall, the top line is expanding, and they are approaching profitability over the next few years. And taking a look, they ended the quarter with $2.4 billion in cash and zero debt. Zero debt on the balance sheet as of the end of the latest quarter in 2022 with $2.4 billion in cash. So very similar to AMD, a very strong balance sheet. The company's not yet profitable, so they aren't funding their growth right away. They are diluting shareholders and selling more shares to generate capital. But at this current point in time, they're not relying on leverage. So as interest rates continue to go up, which is hurting the leverage ratios for a lot of companies on the market right now, Palantir has no issue with that. The company has no leverage risk, zero debt on the balance sheet, which is a very attractive sign. So if you're the type of investor looking for a high potential grower, but is also willing to accept the risk that comes along with it, Palantir is definitely a name to take a look at and to do some research into, because they do have the strength of the balance sheet. They have been growing at a rapid rate quarter over quarter, and once the market begins to turn upwards, again, another company that may be poised to benefit. And if we take a look at their guidance for the full fiscal year 2022, they reaffirmed it as of the latest quarter, estimating around $1.9 billion of total top-line revenue, with estimated income from operations to be around $384 million. So overall, Palantir has performed very well. They continue to grow quarter after quarter, even though the share price has taken a major hit. So definitely worth keeping on your watch list. So overall, AMD and Palantir were two companies who have seen a major beatdown throughout 2022. Their share prices are now down over 60% from their latest highs. Both companies continue to operate very well, growing quarter after quarter with very strong balance sheets. So those are two names that might be worth taking a look at. Definitely worth doing some research into the companies and may make a nice addition to a growth portfolio that is poised to rebound once the overall market begins to uptrend once again. So thank you for watching all the way to the end. Please hit that like button and subscribe if you already haven't done so, and I will see you in the next video.